You were listening to chartingwealth.com for Tuesday, the 26th of July, 2016. Well, we're about to jump into the markets and talk about what went on. And again, please remember what we do here every day. And we appreciate all the compliments and backslaps that you give us. But we are totally dedicated to helping average folks, hopefully above average folks, figure out how to read these charts. There is nothing Wall Street has on you other than their ability to read charts better. Sometimes they have inside information, but again, the charts tell you so much about what is going on. We always hear, or I hear all the time, buy on the rumor, sell on the news. And that means by the time you read about it in the Wall Street Journal, you see it on Bloomberg or CNBC, any of those places, it's already happened. You can see it happen when you watch these charts. That's why we talk about it again and again and again. For all you value investors out there who say, well, I'm going to value my companies and I'm going to pay attention to what the metrics are. That's going to tell me what stock is at the right price. Well, let me tell you, it's like with anything. You can go into a car lot and buy the finest automobile in the world, but you can pay sticker price or you can pay a reasonable price. And I would always want to pay less than sticker. And what we try to talk about here on the program every day is helping you figure out day by day, practicing a little bit, using our daily worksheet, listening to this broadcast, figuring out which way the market's moving, understanding how to get in and get out of stock trades, stock investments, however you want to look at it, buying and selling ETFs, whether they're inverse funds, whether they're the three indexes we talk about or gold or whatever it is. You can take all these lessons anywhere, but it's so imperative that you watch the market every day, figure out how it's moving, and understand how to read these stock charts. With that said, let's jump right into it. First, we always start with IYY. That is the iShares Dow Jones U.S. Total Market Index Fund. It's an exchange-traded fund that tracks the whole market. What do we see going on? Well, it looks like the market is topping. We have not really seen any movement above the highest high. We've not closed above the highest high on the two-day candle for the 15th of July. And we are all the way over on the 25th of July going into the 26th. Market was down technically 0.25% for the day on Monday. Now we look at our two-day candle. It is a green open box candle with a wick on top. That wick represents the down movement that we saw over the course of Monday. It is a two-day candle representing both the movement of the index, the total market, on Friday and Monday. Some people say, why don't you use a two-day instead of a one-day? For some reason, we have found by experimentation, and that's what this is all about, that two-day candle helps us find a long-term trend a whole lot better. Now, if you've not already listened to our weekly review and forecast, it's not too late. It's only Tuesday. As you listen to this, you need to make sure you understand where the charts are on the weekly charts, because that is where the market defaults to. All things being equal, the market typically moves in the direction of the biggest wave, and that is the weekly chart. You get much bigger than the weekly, and it's hard to find a pattern. The weekly tends to be a good. The 4-day or the 5-day, which is the weekly, is good. So we do have a bit of a down day today. That is Monday. Again, down 0.25% total market, but we still have the MACD and the signal line going up. Derivative oscillator, it looks like it might have even gained a little bit of energy, and we do have a green up candle. We did redraw the trend line because we did not have a good trend line with where the market opened on our Heikin Ashi type candlesticks. So again, let's just watch what's going on. Could be a topping out. You're going to see that even more when we look at our 4-hour chart. Now, the 4-hour chart shows that the market topped out. The highest high was somewhere around the afternoon of the 20th, and where the market closed at the end of the day, we hit all the way back on the 18th, which was the high on the 18th, somewhere around in the afternoon of Monday the 18th. So Again, the market has been sliding sideways, getting very close to violating the 2-day trend line. It has been on the short chart, the 4-hour chart, in a pullback since the 19th when it crossed over. That is, the signal line crossed over the MACD. We're in negative territory on our derivative oscillator. It actually heated up toward the end of the day, well, throughout the day. And we've seen a wider divergence between the signal line and the MACD going down. So that pullback may very well turn into an overall down candle with the big chart. But again, weekly chart still in an uptrend, daily chart still in an uptrend, 2-day chart still in an uptrend. So we want to pay attention. If we see a crossover going up on the 4-hour chart with our big charts still in an up move, that is when you want to buy in. That is when you want to jump in your virtual trade. I always say that with a caveat. We're not a stock calling service. We are not paid. We don't give advice on trading. Everything we talk about is virtual trades because we want you to practice. The best way to practice, the cheapest way to practice is to open yourself up an account, any of the online brokers, and get in there, make yourself a virtual millionaire, and start buying and selling in your virtual account. Understand how to enter trades, how to set good till canceled, sell orders up 20% and out, which is what I do the minute I buy anything. If there's some huge up move in the market, I want to capture it. 20% is always good enough for me. So let's, again, continue to pay attention. If we see a crossover going up on this 4-hour chart, be ready, willing, and able to jump in and get some of that up move. All right, let's go back to our 2-day chart. Let's jump into the S&P 500 as reflected by the SPDR's S&P 500 Trust Series Exchange Traded Fund. It too is sliding sideways, about the same as the total market. We had to redraw our 2-day trend line because of how it opened lower, and we will continue to monitor that. Looks like the derivative oscillator kept about the same energy. MACD and signal line continuing to move up on the 2-day chart. We are worried about a topping out. We look on the 4-hour chart. That's what we see. We have a continued pullback, which started on the 19th. And again, remember, our theory is we look for a trend either going up or down on our 2-day chart. We like it when that trend's going in the same direction as our double long or our weekly chart. Then we wait for a pullback, that is a movement in the opposite direction on our 4-hour chart. And then we want it to cross back over in the direction of the big chart. When that happens, that's where you can most safely get in and ride that up movement in a trend following position. For those of you who've been listening to us a long time, what does it tell you when the Bollinger Bands get tighter? Bollinger Bands are volatility bands, means volatility is decreasing. Why? Because the market has been in a very tight movement, very tight price range over the last several days since about the 19th or so. Actually, you could follow that movement all the way back almost to the 14th. It's not gone up very much since then. So we'll continue to watch and see. And again, we see that pullback end and the MACD cross over the signal line going up. Might be a great opportunity to get in if this market has not already peaked, and it may have already done that. If that's what's happened, hey folks, we let the charts tell us what to do, right? We don't tell the charts what to do. You can try, you'll always lose. Okay, let's go to, and again, SPY, the Standard & Poor's 500 was down 0.27%. Now, different story over at the Qs, the NASDAQ 100 technology stocks up. We didn't have to redraw our trend line, continuing. We got a nice trend line connecting 4 2-day candles going up. Saw the derivative oscillator continue to gain energy, and the MACD and signal line continue to diverge and move up. So strong up movement on the Qs. Let's take a look at the 4-hour chart. What do we see? Very interesting. The 4-hour chart, for those of you who jumped in when it crossed over sometime either in the morning of the 20th or the 21st, we then saw it cross back over going down, but again, that's not necessarily our trigger. We then really pay attention to our trend lines, and at that point, the market continued to move up ever so slightly, not nearly as much of a down movement as we've seen, or a sideways sliding as we've seen with the S&P 500 and the total market. So again, those of you looking for another opportunity to get into the Qs, if it happens and it crosses over going up again, that might be your opportunity to get in. Again, the market may have played itself out. We just don't know at this point, waiting for further confirmation. So those of you who did jump in sometime on the 20th, be careful. Just continue to be careful. Set yourself alerts. If you don't know what I'm talking about, plenty of services for free that'll send you alerts when certain price points hit. People always say, what about a stop? I don't like stop loss orders, because once that's triggered, you get sold out at the market price, whatever that might be. And a lot of times that happens when the market maker's in control, when the market first opens, and they are going through and taking advantage of all the stop limit orders. So be careful when they clear the stops in the morning. All right, and if you want more about that, go to the website, chartingwealth.com. You can actually find the teaching that we have there. You will get a lot out of it. Okay, let's continue to move on. That is where we are on the Qs. We're going to go now to our final ETF, gold. What is gold doing? Well, gold is in a confirmed down move since it crossed over going down right there on the 21st. Actually, this is our first closed candle after the down move on the 25th. We've tried to start drawing a trend line. It's only connecting two candles. That's easy to do. You can always connect two candles to something. Remember the rule, whenever you draw trend lines, bottom up. If the market's moving up, top down, as we see gold is moving down. Gold was down 0.70% for the day. Derivative oscillator heated up a lot. MACD and the signal line diverged a lot. If we go to our 4-hour chart, what do we see? We see that gold is continuing to move down. We've had no pullback, so no jump-in point on gold unless you were trying to use any of the green up candles on our Hinkin Ashis. And again, much more risky, although none of them would have done you bad so far jumping in. You would have done okay jumping into this down movement, but always more risky than a pullback. But of course, more opportunities. And again, you're just practicing. So give these things a shot, see what works. Sometimes you'll find things work on one index, but not on another. You'll find also that certain tricks and things that you learn work certain times of year, but not others. Remember, the summer is the worst time to trade. Typically, the market moves up and down. There's not a lot of volume. It slips sideways. If you can figure out how to trade and make good money in the summertime, you are doing very well. Fall-winter trading zone typically gets a lot easier, whether the market's going up or down. And don't forget, you can make money when the market goes down with inverse funds. Go listen to our training either at the YouTube or at Charting Wealth or at iTunes. It is there and available for you. What that's about, what is it about? It's making money on inverse funds, how to make money when markets crash. Look up inverse funds. You will be impressed, I think, by that teaching and by the opportunities that it offers you. So we don't have a pullback yet. Remember, gold was going down, so the pullback would be in the up direction and then the continued down. We haven't had that happen yet, so we've got no entry points unless you are trying to use some of the green Hinkin Ashi pullbacks to jump in when it goes red again. That's possible. And again, more risky, but more opportunities. That is where we wrap up the markets on Monday as we go into Tuesday, the 26th of July. Hope this week has started off well for you. Continue to pay attention, look for opportunities, practice. If you don't have a copy of our daily worksheet, you need to get it. You can find a link to that at any of the postings that we have, whether it's at iTunes, whether it's on YouTube, Facebook, you name it. We put all of that information in when we put in our daily chart reviews. And if you want to subscribe to those chart reviews, you can go to chartingwealth.com and do it. If you want to help us out, we ask you to do two things. The first, subscribe to our YouTube channel. We're getting closer and closer on that magic 1,000 subscribers. When we hit that, we can do proprietary broadcasts to you. Who will those go to? Our 1,000 subscribers. So please go there, subscribe. Also, if you want to help us out, go to iTunes, subscribe to us there. That is Charting Wealth at iTunes, and give us a 5-star review and say something nice about us. You can do the same. Say something nice about us on Facebook. Like our posts. We appreciate you. We hope you appreciate us. We love to hear from you. We'll continue to try to put out information that you find helpful and that will assist you in learning how to read these charts. They are literally your guidepost to success in the future. Thanks so much. God bless you from chartingwealth.com.